and we are covering important theory as well as objective questions plus numericals. Okay, for all the chapters of BFM. Today we are in chapter number 6. So let's start the theories here. Today we'll be covering theory and objective questions both. Okay, so let's start. First, foreign equity holder. Okay, one more thing. Have you followed the test, the series yesterday or day before yesterday? Sure. I have covered various topics on the same subject, same this chapter earlier also. On the earlier chapters also. This is chapter number 6. We have covered 5, 4, 3, 2, 1 also. So follow the complete series because it's for you and it's available freely, isn't it? So let's start today. Foreign equity holder. Who is known as a foreign equity holder? These are all the important questions which come in the exam. Okay, they'll directly give you foreign equity holder as per FEMA means. So they'll give you 2, 3 options, and then one of them will be wrong. Then you have to find out whichever is wrong, or they'll give you 2 options, and then they'll ask you both of them, either of them, none of them, something like this. Okay, so that's why you need to be very clear in the concepts. Foreign equity holder means what? It means direct foreign equity holder with minimum 25% direct equity holding in the borrowing entity. Means suppose if there is a borrower, some X person from USA. Person means I'm not talking of person. It can be a company also. That company buys some shares in some Indian company. Okay, holder with minimum 25% direct equity holder. So if let's say they buy 25% in some bank, so that becomes, if minimum 25%, more than 25% they should buy, then only they are called as foreign equity holder. That is point number A. Point number B is also there. Indirect equity holder with a minimum indirect equity holding of 51%. Okay, so direct if somebody is buying, then 25%. If indirectly they are buying, indirectly means what? From the open market. So if they are buying it from the open market, it should be minimum 51%. And the third category is also there. Group company with the overseas parent. That is obviously, suppose if I am having 2 companies, let's say in over here, I say HSBC Bank and HSBC Home Loans. Let's say if we have, or Standard Chartered, we are having many divisions. Now many of them have closed. Standard Chartered Bank, Standard Chartered Credit Card, Standard Chartered Home Loans, all were there. But the parent company was one, Standard Chartered. So that is known as a foreign equity holder, group company. So now you got these 3 categories. Number 1, minimum 25% for direct equity, 51 for indirect, and last one is group company with a parent, common parent. Okay, it represents any foreign resident individual, foreign corporate bodies who have invested in the company under automatic or approval route. Now what is automatic and approval route? Follow yesterday's lecture. I have given the clear discrimination between automatic and RBI approval route. Just to summarize this, automatic and approvals here. In automatic route, the documents are checked by the bank itself. And under approval route, the documents are checked by the RBI. Okay. There are various sectors under which the automatic route is applied or allowed. Various infrastructure sectors are there. Huh? So that's why I say follow this series completely, because all the important points are taken over here. So it can be a health sector, it can be aviation sector, it can be something else also related to infra. So all these sectors free, this foreign equity holding is allowed. Free means in the sense not free. It's under the automatic route. Okay. Person resident in India as per FEMA. This is a definition of under FEMA. So what is the person resident in India? Irrespective of his residence in India. Now look at this. Irrespective of residence in India, in the previous financial year, when he has come to India for employment, carrying business or any purpose which indicates his or her intention to stay in India for an uncertain period. Uncertain. Okay. So remember, irrespective of his stay in India. So this is one criteria. There are other 2 criteria as well for person resident in India. For last financial year, how many days that person should have stayed. For last this 7 financial years, out of them, how many years. This all are in details. These can't be taught immediately in half an hour session. So general rule given everywhere is irrespective of the residence period in the previous financial year when the person has an unlimited period. That is number one definition. It also gives the second part in your book. It shall have the same meaning as assigned to them under section 2.5 of FEMA 1999. Now here it defines clearly. Section 2.5 of FEMA says what? Last financial year, how many days this person should have stayed in India. Okay? Or last 7 years, out of those last 7 years, how many years this person should have been visiting India or staying in India. So these all are the definitions. Okay? Real estate activities. A real estate activity involving own or leased property for buying, selling, and renting of commercial or residential properties or land. So what I mean by real estate, it can involve any of these. Owned, involving owned, leased property for buying, selling, and renting of commercial spaces. So suppose if I'm any resident individual or some foreign guy also. If I am dealing in any of these buying, selling, or renting of commercial and residential spaces, so then I'm in the real estate activity. And also includes activities either on fee or contract basis, assigning real estate agents for intermediating between buying, selling, letting, and managing real estate. Now, the definition has become wider. Here it was only related to me. I am doing something, I am buying, selling, doing. But even if I am appointing the agent, I am working as a broker, then also that is also considered under real estate activities. Okay, so it includes both. Say this, the either I myself doing this or includes activities on fee or contract basis. See this, fee, broker charges a fee, or contract basis. Even if I don't charge a fee, contract basis, I have a contract. In that case also assigning real estate agents for intermediating between buying, selling, letting, and managing real estate. Okay, so both the things are included. Remember this. Everyone subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting the latest updates. Not only updates, you will be getting it explained from IIBF. What all IIBF says about JIB and CIB, it gives various circulars in between. So all those latest updates are discussed on Adda 24/7 app, Officers Adda 24/7 app. Okay, so updates are there. Number one. Number two, you get free YouTube series. Right now, what are you watching? Free YouTube series, right? Free YT. So this free YT series, you get it on Officers Adda 24/7. So whatever is free, grab it fast. Subscribe to the channel, click on the bell icon, click on the like button, share it with your friends. Isn't it? Because here, sharing is caring. Whatever is free, you must share it. Okay? Now let's come to the question time. The credit directly extended by the overseas supplier of goods to the importer is called as what? Buyer's credit, supplier's credit, trade credit, or ECB, external commercial borrowing. That is called as what? What do you mean by this overseas supplier extending? See here, this is in case of imports. I'll explain you. See here, my guy, let's say I'm in Bharat. Okay, now we'll call it Bharat, isn't it? The things are changing in India now. Suppose this is Mr. X. Okay, Mr. X is a buyer. See here, Mr. X needs to be the importer over here. Importer for this supplier's credit. And somebody in, let's say, USA, that guy is supplying Mr. Y. That guy is supplying Mr. Mrs. I'm not gender biased. Mr. Y, Mrs. Y, Mr. X, Mrs. X, anything okay. Okay, so Y is supplying this goods, raw material, we'll call it raw. Okay, raw material to X. So what happens in this case? So if Y is supplying X, so X will have to pay to Y. Now if the payment terms are 60 days, 60 days from the receipt of the goods, then why should Y trust this X if X doesn't pay then? So in that case what happens? Y says that I don't trust you. What you do? You arrange from your bank, let's say SBI. You arrange from your bank over here that they should give me a guarantee. They should sign the bill of exchange, stamp the bill of exchange in addition to you. So you definitely give me the assurance that you will pay, but even in more than that, I want the assurance from your bank. So this SBI gives an assurance to Y that see you send him the material on and on the 60th day I will pay you. Forget this X. So this is known as the supplier's credit. Okay. So extended by the overseas supplier. See, this is the supplier, right? Supplier. So this guy is the supplier. So this supplier has extended the credit for 60 days and this is a part of working capital, important part. Okay, next one. The credit arranged by the buyer from a bank, FI, outside India to settle the payment of imports is known as what? Similar question as the earlier one, but slight difference. Masala tadka, right? We have that. What is the difference between dal? What we call dal tadka and dal? Some normal dal is also there, na? Normal dal we'll call it now, isn't it? Yeah. What is the difference between that? That dal, we call it dal something, isn't it? Forget it. So normal dal and dal tadka. What is the difference between them? There is a tadka in this. Same tadka is over here. Same earlier one. Y supplier, X buyer in India. This is from India. Okay, Bharat. Okay. Now what happens? Y is going to supply the goods. Y is supplying the goods. But the problem over here now changes. Y says, I don't want any 60 days credit. Your bank will pay me after 60 days. I don't wait for 60 days. Okay. You give me right now cash. I don't know anything. I want cash. Only then I'll give it. So in that case, what happens? X says, I don't have money. So X, what does it do? X is a big client. Because generally when somebody arranges for buyer's credit, means some imports, that client knows many of the banks are outside also. So what Mr. X does? X arranges, let's say one example, I'm just giving you Citibank. Okay. Citibank. If we are talking of USA. Okay. So X arranges for Citibank. So what will Citibank do? Citibank will pay this guy immediately, cash. Cash. But who will pay Citibank? So in that case, X goes to SBI. Earlier arrangement same. So X goes to SBI. SBI is his bank in his or her bank in India. So X goes to SBI and tells SBI that see, SBI Citibank is paying this person cash right now. What you do? I have guaranteed them 60 days payment. So earlier 60 days payment was there. So SBI will give this Citibank after 60 days plus interest. Whatever that interest might have been generated on this amount at their rate, whatever rate they are agreeable to. Okay. So that rate plus on that rate this SBI will pay interest. So why should SBI pay the interest? Because it will recover it from this client. This client will pay to SBI and then SBI will pay to Citi. This is known as buyer's credit. So buyer's credit means what? Here the client means our importer arranges for some bank in the USA or any country. Okay. And then this SBI becomes just as a mediator in between. Mediator. Okay. Chalo. Let's move on. There are important forms in this. Yeah, in this buyers and suppliers credit. There are two important forms which I generally teach in the classes 15 CA and CB. Very important forms. Okay. That's why I'm saying join the classes. Everything can't be taught in the half-hour session. Okay. Now download Adda 24/7 app on your mobile. In this app, you'll be getting the premium study material plus live classes, ebooks, test, everything. Whatever you need for clearing JIB and CIB, you'll get it over here. So join fast. Okay. Download this app and start reading. The supplier's credit extended by the overseas supplier for a period more than 3 years. Now look at this. There is a twist again, tadka, isn't it? Anyone got the name of this dal? What did I say about that dal? Dal tadka and dal. What do we call it? Normal dal? I don't remember this name. Dal, we regularly eat that dal, isn't it? Yeah, without this tadka. Yeah. Yes. So this is again a tadka. What is this tadka? This supplier's credit, just now we saw it in question number 1. That Mr. Y is giving credit for 60 days and SBI will be paying after 60 days. But now what happens? There is a limit for this supplier's credit. it is maximum 3 years. If any supplier is giving you the credit beyond 3 years, then it becomes difficult. Then it becomes moves under different category. See here, generally up to this 3 years, it's called as buyer's credit, supplier's credit, and both are under the same category of trade credit. A and B are under the category of C. But this D is different. D becomes external commercial borrowing when the period goes beyond 3 years. Okay. So the supplier's credit extended to the overseas supplier by the overseas supplier for a period more than 3 years is termed as ECB, external commercial borrowing, and that is the actual chapter. Okay. Everyone join the Sankalpa batch starting on September 4th. Fresh batch starting. Last batch for this year, for this session, for the detailed session, actually detailed batch we call it, isn't it? So everything will be covered over here. Numerical, objective questions, case studies. Okay. So everything will be covered. All the 4 compulsory subjects are covered. Join ASAP. You can join the Mahapack also. In Mahapack you are getting multiple batches plus live classes, ebooks, tests, recorded videos, Maha and mini marathons, practice sessions, doubt sessions, everything you are getting. So that's why join it ASAP. Okay. I'll share. You can use various codes available whenever you join. Okay. If you join today, okay, then you will be having different codes. Some codes hardly 1 or 2% difference it makes. Okay. So let me show you how to join this. Go to Adda 24/7. If you go through the app, you're getting it better. Okay. In the app, you have coin systems. There you earn around 1% extra using the coins. Click on JIB and CAIIB. Click on CAIIB November. Okay. Now look at this. Sankalpa batch. Join this batch ASAP. Okay. See this. Interactive classes, 300 hours online live classes, 56 test series, 65 ebooks. What all do you want? What is the fees? 4799. Click on buy now. That's why I'm saying check the codes. Whichever are the maximum codes available, use those. Okay. So even if you say 4799, how many months will you recover this once you clear your CAIIB? Hardly 5-6 months. So it's an investment for lifetime. Go for it. In fact, you can join the Mahapacks as I told you earlier. In Mahapacks, how to join this? See this. Go to JIB CAIIB Mahapacks. See this. There click on CAIIB Mahapack 2.0. In this Mahapack, you will see 500 hours of online live classes, 122 test series, 216 ebooks. Then videos are available, 970 videos, my God. Recorded videos are available. Look at the fees, 7367. Huge difference. And double validity is going on right now, 6 plus 6 months. Okay. So join this ASAP. Okay. Click on continue and pay it. So that's what I would suggest. Always join the batch. At least join the batch fast. Okay. Because this is the last batch coming up with the detailed study. Afterwards, we'll be having the fast batches because there will be exam time at that time. So join it ASAP. I'll be back tomorrow with another series. Till then, keep studying. Okay.